Aloha, this is Joshua Hayes at BigWaveTrading.com going to you with part one, which is the index. We're going to analyze the indexes here. The first thing I want to show you that I want you to notice down here is something that's different for charts and what's different for indexes. For charts, when you have BOP rising and going over the zero line, that's very bullish, obviously, for your charts. That's how you get your max green charts and get all your other beautiful ones. Gosh, I wish that this chart market had more. It would give you more of like these kind of charts. You would have way more CLNE type of charts. That would be good than you would have the NYSE. Usually when the NYSE starts to build and starts to grow like that, like look at the last time it grew. What did it do from there? It sold off 12%. So now with the New York Stock Exchange getting strong again, volume coming before it, and with volume on that extremely heavy day, something happened that I want you folks that you got to remember. There were over 600 longs to look at. 600 longs. I mean, I should have had at least 6 longs, 60 longs, or I should have had at least 20 longs. I should have had a ton of different longs on a day with volume this much higher than the day before. And this huge volume compared to that, I mean, it's just ridiculous. So I should have had a ton of stocks coming out to buy. But do you notice that the purple 200-day moving average is leading the highest? Then the 50-day moving average is leading right below it. And then the regular price of the stock is under the averages. This is why I only had one stock come up. And let me see on this other chart how it is doing, if I can even remember what it was. I may not even be able to remember what symbol it was. And in fact, I can't remember. So let me go here to my silver longs page. There we go. There it is where everybody talks about it. Somebody written in like how it was like going to definitely fail. And so far, this person is semi-right, but he's not really right. The stock is 10% gain. So that means it has a 10% shot at pulling back before coming a loss. This guy has seen a 4 and now a 1.27% gain. He has seen a 3.24% pullback. Has noticed that he should have, if he's watching this, he should notice that his pullback is right on the pivot point area of the base that it broke out of. It still has max green BOP, and he should notice that BOP as volume falls, so does the price. So price rises and huge volume comes, price falls and little volume comes, and there's a lot of max green BOP. So we'll see who's right. The guy who's been reading charts for 13 years or the guy that's been reading charts for a few months. Anyway, let's move on to the indexes. Let's go to CompQX. This is the NASD. I see the exact same thing. Look at how BOP got strong here and went a little bit higher on the price pattern here. But now that BOP looks very strong after two very strong daily charts, notice how the 50-day moving average looked as perfect resistance. I mean, it stopped right at the 50-day moving average. And let's look at the NYSE. This one, too, stopped look at the tail. Stopped right at the 50-day moving average. And then as it failed, and it didn't fail on heavy volume. Notice how low the volume is. This is where I want to go back to where this is a 5% pullback on extremely low volume. This is where I want to go to prove that in indexes, like look at this entire move from July to August. No volume on that move whatsoever. But what did the index do? The index fell 3% while there was no volume. I'm sure if I go further, 6%. So while there was no volume, 6%. So the index fell 6% with no volume. I know I keep repeating these things, but you guys got to realize these are the important things. When you see me repeat this much crap, you know what I'm talking about is very important. Let's look at the S&P 500. The S&P 500 right now looks just like the NYSE. Do you notice how it gets right here? Intraday, it tries to go over the 50-day moving average, but it can't hold on its biggest volume ever, and then it fails right here at the next day, right at the 50-day moving average. Notice how the 200-day moving average is on top. So even if this does get through the white line, it still has to get through the purple line before I can even get bullish. Once that happens, then I start to get bullish. Then I start to go look for nice charts. Then once I see the price over the 250-day moving average, I go, yippee, I'm bullish, like I did with the dollar. But I got to show the dollar somehow in this. See, when the dollar did this move right here in August, got over the August 200-day moving average, I got very bullish. Now that it is pulled back right to the 50-day moving average, I am way less bullish than what I was. But I like to see that it bounced right off the 50-day moving average. But I don't know if today's move is in there yet. It doesn't look like it is at all. As you see, no volume. So it hasn't been priced yet for the day. I need to see what it looks like. But if it bounces right off the 50-day moving average and going higher, then that will prove my cross of August being exactly what you want to see. So once I see that in the indexes, I will get a lot more happier. But then I got to see them go higher and stay above the 50 and 200-day moving average with a follow-through day coming sometime during that time for me to really believe in it. I want to show you now our strongest index of them all, the S&P 600, and show you that somehow on Friday it fell 1.30%, while the stocks like the New York Stock Exchange fell 1.68%. So there was a lot of stocks that were definitely falling, and there were definitely some problems, that we had so far. I got a phone call over here, so I'm kind of getting a little distracted. But now look at the small cap 600s. Look at how now it fails and it drops below the 50 and 200-day moving average. To me, this is very bearish today, and I believe that 923's move is really, really bearish for the S&P 600. Even if volume is the size of my toenail, let's say. I guess that would be no, on the size of my pinky tail. If volume is even the size of my pinky tail on this chart, that is still super bearish to fall 1.3% to undercut the 50 and 200-day moving average. Well, I think I've shown you what I need to show you here. There is extreme damage that's in here. I want to go to the stock that I recently went long. I wish I could and do it without showing the symbol and everything, but I don't think I can do that. Oh well, I want to show that guy how his interpretation of his stock is kind of silly. Let me do a quick flash, and then you all can probably see what it looks like. And so it looks like some of you free guys will get a free peek at something. Then as I go back at something, as I did something wrong here, and then as you see, that's what the guy is arguing me about. Let's show you what it looks like on a more long-term pattern chart that the guy thinks that he's freaking me out on. And as you can see there, look at that. Does that really? Oh yeah, great, way to go, Josh. Now everybody knows it. Oh, well, it doesn't matter. Congratulations. This could be a long that you guys could take as it hits the 50-day moving average or bounces right here off this pivot point. Look at all the max green bop. Look at all the green daily bop. Look at the great price action. Look at all the beautiful bars that are open. You see tails everywhere. There, that could be a buy. I'm sorry. I'm sorry, subscribers, but you knew I was going to do that, right? Right. Okay. Aloha, everybody. This is Joshua Hayes at BigWaveTrading.com. I'm going to go ahead and wrap it up here because it's right at the 10-minute mark. Aloha.